And no, it's a good morning. I hope everybody was able to make it there safe. And for those joining remotely, again, it's kind of the new world, right? It's a remote world that we're in. Well, Karen and I go back many years, and so I worked for different organizations, different banks. And last November, I joined forces with Five Star Bank as their Southern California regional president. And so after talking for a bit, since we as a bank can do everything commercial wise, we thought it'd be great to get together with you folks as you're expanding your kind of your niche and to let you know about what I'm doing and see if I can be a resource for you for the team as you're out there hunting. So I don't know if there's any initial questions, Karen, or anything that you wanted me to specifically go over with everybody.
I think essentially we want to have you present what it is that you do, what we need in terms of information to get you, so that you can make a decision on what we can do, and maybe any trends or whatnot that you're seeing, especially because right now in the market we've seen some delays and it stalled a little bit. So when we were talking before about commercial, it really seemed like the rates haven't affected the commercial market the way they've affected the residential market.
Right. Okay. Well, definitely. Well, the big picture of what I do is we do commercial financing for faith-based organizations as well as for-profit organizations. Also the banking side of things as well. But from a lending standpoint, we are what they call preferred SBA lender. So we can do all SBA related loans, as well as standard traditional commercial loans. And some of the benefits is that we are fast. So we're usually within 45 to 65 days on a typical deal. That's, everything is good to go. Title's clean. And of course, if you're experienced with commercial, sometimes that's not always the case. And so there are things that can delay the project. But that's a big picture of what we do. Some of the niches that we run, like I said, faith-based. We do a lot of manufactured home parks. So for the park itself, which is a little bit unique. We do a lot of the investor-owned, or even your concrete tilt-up buildings, a lot of your standard commercial you're going to see here in Southern California. Like I said, those big concrete tilt-up buildings, we can do a lot of those fun projects. We've done some strip malls as well. So maybe a 6-unit, 12-unit little mall here in Southern California, we can do that as well. But your investor properties, we can do. We're not going to be your lender of last resort. We're going to want a straightforward project. So I've talked to investors where they're taking an interest or they have property out of state and they want to take a loan off of that, put it on a new property here, but not tie this other property up where the money is actually being used. That can make it a little bit complicated. And so if the borrower is not a strong personal guarantee, it makes it thin and tougher to do. So it's kind of, I see those a lot and come at my desk on the commercial world. So just kind of give you a fair warning on those. Those are not your low-hanging fruit if that's what you're looking for. You're, like I said, when you have properties, the collateral's out of state compared to here, or just a bunch of mixed use collateral, not mixed use itself, but what I mean is where you have one collateral financing the project on another parcel, right? From a need standpoint, we are going to typically want 3 years financials of the corporation, and we're going to want to get 3 years tax returns from the corporation as well as the personal guarantors. Anyone 20% or more ownership, we need to get their tax returns as well as a personal financial statement. And that's going to be a good start there. And then any information about the deal, the structure, what they're looking for. A lot of times in the commercial world, I like to ask them what they want, what their goals are, what they're trying to do, because there's a lot of different ways I can structure a deal. I don't have traditional grids and schematics where if you fall into here based on your request and this is the box you fit into, it's really customized. So for me, the best thing is to say, what are they trying to do? Whether it's get cash out and hold it long term, they want to improve it, then flip it, or whatever it might be. Understanding that behind just, I need a loan, but why do you want the loan? What is your intended use and what are you going to do with this? And maybe what are some of the future projects, if any? That's helpful so that I can help structure the deal in a way that's going to be advantageous to them today, but also work for them in the future. So that's kind of what I need. If you're looking at some of the trends, well, let me pause. Any questions on what I've said so far?
Anybody have any questions?
So you need 3 years for the corporation on the financials and tax returns, as well as 3 years for all 20% or more owners.
Yes. And a personal financial statement of all owners that have 20% or more ownership of the stake. I could usually provide a template on a PFS, but I mean, if they do a search for one, they can usually find one and fill it in. And with the tax returns, if it's relevant, K1s as well with that. Any other questions on that? All right, well, I'm going to go ahead and move forward. So some of the trends I think that we're looking at, there is a lot of desire with cash is king. And I think the pandemic really showed that. So there's a lot of desire for people to pull cash out, take advantage of the equity in properties. I think probably before potentially values drop a little bit. I don't expect too much of a drop, too much of a hit on the commercial side. But I think it depends on who you talk to. There are some people that are expecting next year rates to drop a little bit within the next year or so. And but on the long term, rates are going to continue to grow. They're going to continue to rise. We're still in a low rate environment relative to how rates have been historically and where they could go in the future. So one of the things I'm still looking at is for those organizations that are looking for a long-term play here, not short-term. I can do a 20-year swap loan, so I'm able to fix their rate for 20 years, which in this market is pretty unique. Usually in your commercial market, especially right now with rates rising in this near future, everything is around 3, 5, and 7-year maximum terms, maximum balloons. So I'm able to max balloon up to 20 years and lock the rate for the full term with a swap. For that product, I need at least $1 million of net worth on the balance sheet, pre-depreciation and amortization. So for your typical small business, that actually here in California, that could actually work out unless they've maximized their equity. So for the borrowers that have maximized equity, maybe some seller cash back, that may not be an option unless they have cash to put into it. But for your buyers that maybe have purchased property a few years back, or they've bought it in a conventional method, putting 25% down or more, then they should qualify for this swap loan. And a couple of benefits of that, like I said, is a long-term rate. So the rate's going to be locked in for a full 20 years. I can amortize it to 30 years. So that'll give them maximum cash flow. And the deal has two cool benefits. One is that if they sell the property, they can sell this loan in the terms with the property. So there's an asset that they can sell alongside the property, and there's no cost to them for that. And they can also transfer the note to a new property, kind of like a 1031 exchange with the loan itself. So they can take that loan, move it to a new property at no cost to them with this swap loan product. So they get to do a long-term lock rate. They get all these other benefits, but they're not locked into the property itself. If the business grows and they need to expand, they can do so without fear of losing these terms or getting stuck where they're at. Any questions so far? Let me ask you.
I would like if you can go over to Mike, some of the information you were going over in terms of what let's say our agents can keep an eye out for, that you could say, you know what, like you said, you don't do the low-hanging fruit, but is there something that they can look out for and say, hey guys, if you see this, or hey, maybe you can go after this type of client or these types of clients to kind of help, let's say, broaden their minds? Because a lot of us have done residential for so long that we need a little bit of guidance in terms of what are we looking for in terms of in commercial and those commercial deals, so that we can send them to you.
Right. I would say candidly, I work with so many years with nonprofit space. So if you come across any nonprofit commercial loan need, I can usually vet them within 5 minutes. I can tell you whether it's a good deal or not. So that's going to be the fastest no, right? You're going to be able to get from me is going to be if it's in the nonprofit space. In the for-profit space, a really good deals typically are going to be your owner user situations. They're going to have a lot more vested in the property than your investor deals. Investor deals can tend to be they're not typically your easiest slam dunk low hanging fruit. So if you're looking for easier deals, it's going to be those owner user deals. You're going to want to see that they have equity in the property. So if they're buying, they're able to either go through SBA route, put the 10% down for SBA, or if they want to go conventional, that they can put 25% or more down. But either of those, if they go SBA 504, we can do that quickly and take care of them. And that only requires 10% down. So I think that's probably an area to look at for your typical buyer. Then they don't have to invest as much into the property by way of cash to get in if they go with an SBA 504. That's only on your for-profit deals though, right? So in that structure, they're putting 10% down, the government's putting 40% of the loan, we're putting 50%. So as a bank, we're not putting as much cash into the project. So it's a little bit more secure on our end. We have a guarantee of the government helping us. So we're able to do some of those deals that as long as it cash flows and the borrower doesn't have to be as strong personally, but they have that 10% cash, they have a business plan that makes sense, then that 504 could be a great option. So that's I think one area of low-hanging fruit. And then again, like I said, on the standard commercial route, your owner user that has good amount of equity, they put cash into the project overall, they've paid down their note. It's not just they bought it and it's over a year, equity grew on its own, but they've actually put some cash into it. Those are going to appear to be stronger, and that they have a strong personal net worth. So if they're not doing SBA 504, then you'll want to see that they have a good personal net worth, experience running their business in the industry and things like that.
Mike, I have a quick question.
Mhm.
For the small business loan, is there like, do the borrowers have to apply somewhere to qualify for that? Like, I mean, other than, you, but can anybody just walk up and be like, hey, I have a small business, can I qualify for this loan? Or like the program?
Right. So 504, they come to me first, and then we either will handle it in-house or we'll work with a CDC to help with the government side of the 40% of the loan. But either way, you'll come to me first. We'll vet it, make sure it's a solid deal, and then we'll bring in the CDC, the government, if needed, or we'll handle it all in-house. So for some of the SBA deals, because we're a preferred lender on SBA, we're able to take lead on the entire thing. But then for certain structures and in proximity, sometimes we like to have somebody local representing from the government local. So the CDC representing the government, they're a separate entity that underwrites for the government. But again, you go to me first, long story short. You come to me, we vet it, make sure that's got legs. And then from there, we can bring in who we need to bring in.
Got it. Thank you.
Mhm.
I have a question for you, Mike.
Yeah.
So regarding FICO score or your score, it doesn't matter with commercial?
Let me let Nikisha in real quick, and then we'll answer your question.
Okay.
So the
No problem.
question right now, what was your name again? I didn't, it says iPhone.
Yesenia, sorry.
You need to
Yesenia?
use this.
Okay. So for
Where's
SBA
your voice thing,
504,
your volume right here?
go ahead and answer your question again. Ask your question again real quick, Yesenia.
So regarding your score, like
Oh, fine.
yeah, I wanted to know, does that matter in the commercial world or it doesn't?
That is a good question. So the FICO does matter in the commercial world. It matters from the guarantor standpoint. So for the business, for commercial credit, you don't need to establish credit like you do personally, right? You don't need to get a credit card and a car loan and use them, pay them off, and build credit up like you do in the commercial world. And the commercial world is really does the business historically trend? And if it's for profit, do the projections of what you're trying to do make sense? And where is that going to take the business, right? We're going to look historically from a cash flow financially, how the business is holding up. And then from there, we'll then look at the guarantor and say, how well can the guarantor support the business in the event something turns bad? Does this guarantor have the ability to infuse capital? Do they historically show that they're responsible and good character? So that's where the credit score will come to play. We are unique in that if the owners, 20% or more, have ever had bankruptcy, we won't do the deal for them. So that's probably the one area that we are just not movable on, is if they've ever had a bankruptcy, then we won't be the lender for them on the for-profit side. On the nonprofit side, I don't look at guarantors. I just look at how well the nonprofit is operating cash flow. So it doesn't matter if the people running the nonprofit have had a bankruptcy. That's not going to impact their credit worthiness on the nonprofit side. So on the for-profit side, it will matter.
Thank you very much.
Yeah, no problem. Yeah, so just to kind of give you a background, we do run, LexisNexis on all guarantors. We'll look where they're at. That's how we'll get the information about their history, lawsuits, those sort of things. So, if it's explainable though, we do understand the story. We'll look at the history, what's happening. But again, if they have a bankruptcy, we won't do it. Any other questions on?
I wanted to just bring up a point, something that you said in terms of you're really quick in terms of making a determination on some of these nonprofits because you've been in nonprofits for so long.
Mhm.
If you guys do a quick search in terms of nonprofit, it's interesting because what first comes up is churches. And I know, Mike, that's something you were saying.
Yeah.
Churches are one of the ones that are in need of help, but they don't always know where to go or who to go to.
Right.
So that would be avenue that you could pursue in terms of who can you help or who can you approach to help with the commercial financing. So churches would be one of the ones on the top of the list.
Yeah, and definitely, if you have that personal relationship with somebody there that you can make the introduction. And I'd say for all these situations, I don't expect you to do a lot. To be candid with you, I'm going to do most of the work. And I've underwritten deals before. I've been trained as a commercial underwriter. So I look at the deal on the front end as best as I can to vet it. From a church standpoint, a lot of times that relationship matters. So if you have that door you can open, I can let them know real quick if it's something we can do or not. If we have, what kind of terms we can do for them. And so that could be, as you kind of get your feet wet in the commercial lending world, that could be a nice one, because all you need to do is make the connection, and then I can walk you through what I'm doing so you can learn. But you don't need to do much on that. And it's very quick because there's not a lot of moving parts for a church. It's quick to get to the meat and be able to say whether you can do it or not. So that's the nice part. But yeah, it's a great point, Karen. They need a lot of help. The nonprofit space has typically little business acumen. And so the more we can do to help them out. And the great part is, you do $1 million, $3 million, $5 million nonprofit loan. It's the same as doing a commercial one, right, for a for-profit. So you still make good money, whether you do it for a nonprofit or a for-profit. And that's one area that I'd say we don't get in when it comes to the broker agreements, or if you're gonna do it as a consulting fee that you charge them, we don't get in the middle of that. A lot of banks do get in the middle of that. They will tell you what you can charge as a maximum. Not all banks, but a lot do. We don't get in the middle of that. That's between you and the borrower, whatever you agree to, and we will put it on title. So you are going to get paid out at closing. So you don't have to worry about collecting, unless you have a separate side agreement with them. That's different. But your typical agreement that you have signed with them, you're going to get paid in closing. So whatever you charge and that they agree to, that's what you'll get paid.
Guys, Mike is a huge asset here because it's really opening up the doors for you guys to look at the real estate in terms of commercial, because many times we've had it where somebody approaches us and they want to go ahead and, hey, I want to, purchase this or purchase that, and it's a commercial building, or it's a coin. I've had it, they want a coin laundry, or they want to go ahead and purchase a mixed use, and it has maybe a store in the front and maybe 3 little units in the back or whatnot. Mike is an asset for this, guys. So we could help with the loan and in the real estate on this. So that way we're able to help the client throughout, where it's not pointing the finger of, okay, you come to me for this. And I've had it before where I've done transactions. And let me just share this, where I'm helping my client and my hands were really handcuffed because they went to a lender, but the lender was not very communicative with me. And I
Mhm.
was helping them with getting some office suites. And I really couldn't get many times information in terms of what was going on. If it was, where in the process we were at. I was discussing with Mike that the appraisal was ordered towards the end of the transaction, where Mike's like, we order it at the beginning because in commercial, it takes a good 5-6 weeks just to get that appraisal
Mhm.
going. Where, in residential, it took a while, but when we say it took a while, it might take like 2 weeks, not 6 weeks, not 2 months. So it's really a huge asset, guys, because you can really concentrate on marketing yourself to commercial owner occupied, owner run businesses, and at the same time uh, help them with the real estate and some of the lending, which makes your job easier because you know what's going on throughout the whole transaction instead of being blind to half of it.
Yeah, and that's a good point, Karen. I think for us, we try to move as fast as possible on a deal. We say we're the fastest no in town, which I alluded to earlier. But also, I see that also means that we're the fastest yes in town. Because if it's not a no, then we're going to do it. It's just documenting it and barring any outside circumstances that we couldn't see on the front end, kind of hijacking the deal. We're going to get it done. In fact, the way we work, I'll explain this real quick. We're a little bit unique in that when I get a deal and I pre-qualify it and it looks like it's good, I'll present it to my bank president and my chief credit officer so that they've looked at it before I send you an expression of interest, so that we have less of that worry that it's going to get down the line into the underwriting phase and be close to closing. You think that everything is good, and then the lender says, "Oh, never mind, we can't do this deal, or we're going to change the terms dramatically," as we call horse trade you. And the reason they typically do that is because somebody higher up saw it, didn't like it, and then says you need to change the terms to this or that in order for this to go through. So the banker had to negotiate on behalf of the borrower with their team to get the deal to a structure that would work. What we like to do is on the front end, figure out what structure works, then present that to you on the front end so that as we move forward, we're all on the same page, we're all moving forward together. And like I said, unless something comes up out of nowhere that sidetracks the deal, we're not going to horse trade you. We're doing what we can to keep it all solid. And then lastly, I would say for anybody that's newer to commercial real estate lending, I'll walk you through the process. So I think it's a good relationship in that we'll work together so that the borrower sees a united front and they feel comfortable. I will connect directly with the borrower in all situations so that the borrower, again, like I said, feels comfortable with what we're doing, but also make sure that you're kept in the loop so that you don't have to babysit it as much, but I will keep you in the loop, and we'll work, like I said, together on the deal to move it forward. And any hurdles that come up, we'll work together with that.
Thank you, Mike. Just one last question. I know we were talking about churches
Mhm.
and they qualify as nonprofit, right?
Correct.
Okay, what will be the minimum? I'm not sure if you mentioned it already, but what will be the minimum that they will have to put down for a loan?
So for a church, the
Mhm.
minimum is going to be 25% down.
25% down. Okay.
Correct. Yeah, 25% down. There are situations where we look at loan to value and loan to cost. So loan to value, appraised value versus the loan, right? And we
Right.
do the lesser of the appraised value or the purchase price,
Okay.
25% of the lesser of those two. So,
Okay.
right. So the only situation
Mhm.
that I can think of where we would take the appraised value. So let's say, for example, you have a tenant that's buying the property
Mhm.
and that they've been in for years. They've invested improvement dollars into the property, to build up the property, make it look better. And now the value is double, right? So the value could be 4 million, but they're buying it for 2 million because of maybe they pre-negotiated the sales price with the seller as part of their lease. Or for some reason, the seller has a soft spot for churches, wants to sell it lower. It's not met the market, right? It hasn't been they didn't try to sell it to somebody else. It's a captive audience to this tenant. In that case, I have got the argument where I can use the appraised value, which is 4 million, not the purchase price, which was in this example 2 million. But at the same time, I do need to have a loan to cost ratio that makes sense.
Okay.
So they have to have put money in improvement dollars to build up the loan to cost, which is where I'm looking at the purchase price plus improvements that they put into the property as the total cost, total dollars in, and how much percentage of that have they put into the project. So we do look at both of those to make sure
Okay.
that the structure is good. But typically you're going to look at the appraised value.
Okay, that makes sense. Thank you.
And
Any
then
other
along the
questions?
lines of the nonprofit, I know several individuals who make hundreds of thousands, if not millions of dollars a year, and they have their own personal 501c3
Yeah.
as a tax shelter for certain things. So are they able to leverage the 501c3 in order to purchase a commercial property versus doing it as the individual themselves?
Yeah, good question. I would say the short answer is yes. It does need to cash flow. So the 501c3, that is the ultimate borrower, does need to have cash flow sufficient to cover the notes, because I don't do guarantor. So that's where, if you, in your situation, AJ, you might say for that borrower, if they'd rather not, if the 501c3 to stand on its own legs and is strong enough to do so, that's a great route to go, because then the borrower doesn't have to put up any personal guarantees. They're not encumbering their personal assets and lending capacity for this nonprofit. They can still do whatever for personal ventures they want to do outside of this. And so we won't ask for that personal guarantee if it's under the nonprofit entity. And if they're here in California, they still will need to put 25% down for the property, right, to make it make sense.
Perfect. Thank you.
Yeah, I think I would say, just because from the simplicity of nonprofit finances are very simple, typically. Though, if you know some nonprofits, some churches especially, those are I would think probably the lowest of hanging fruit, because it's either you can do it or we can't, right? So it's not low hanging fruit from the standpoint of a slam dunk deal, but it is a low hanging fruit of, it's not going to take a lot of time investment to find out whether this is something that can be done or not. And if it can be done, I'm going to take on all of the time investment for the most part of moving the deal forward, and really just keep you in the loop. You're just going to be having made the handshake, and then I'll take over from there. And that's going to be the same case for all of them, but especially the nonprofit. That's the fastest yes or no that you're going to find. And they typically don't know a lot about finances. So if you're uncomfortable, that can be a good route, because they won't know that you don't know what you don't know, right? So it's a good way to learn as well in the nonprofit space. Any other thoughts? I know you said, Karen, you had somebody at 11, so I don't want to disrespect your team if you have another, but I do want to make sure I capture any thoughts you might have.
I think we're good. I don't know if anybody has any questions, guys.
All right. Well,
I think you're good, Mike.
Excellent. Well, I appreciate everybody's time jumping on here and listening to me. Anything, my cell phone number has been on the screen this whole time. My email, feel free to reach out to me, text me or call me anytime. I don't keep office hours. So if you got a deal, just text or call me, and we can talk through it, see if it's something we can do or not. And love to do some business with y'all.